Hello guys, welcome back to my channel. This is my practicing for today. I'm gonna talk about taxes and how rich people avoiding taxes. So, taxes are one of the income instruments received by a country. Taxes are used by a country as a capital to build any aspect such as infrastructure, economics, and health, and other aspects. There are many forms of taxes. For example, is value added tax. This is an indirect tax we pay to the country when buy stuff in the supermarket. And then there are also forms of taxes that are withdrawn from our personal income. So, usually systems of payment taxes using the principle of mutual cooperation, which means someone who has higher income will pay more tax. But you know what? Some people who are rich are trying so hard to pay less taxes, even they are trying to avoid it. This was settled by Robert Kiyosaki in his book that entitled Why They Are Getting Reserved. That one of the discussion is about how to avoid taxes. In fact, tax avoidance efforts often occur even in Indonesia. The Minister of Finance, Mr. Sri Mulyani, stated that collecting taxes on rich people in Indonesia is not easy to do. From here, the question arises, how can rich people avoid taxes? Is it legal to avoid paying taxes? Well, let's discuss it. This behavior of avoiding paying taxes often occurs. There are two forms of tax avoidance, that is tax evasion and tax avoidance. Tax evasion is a tax offense involving the use of illegal methods to reduce the amount of tax payable or even avoid paying taxes altogether. Taslim, as a practitioner of tax and academic, states that tax evasion is an attempt to reduce the amount of tax owed. In other words, to shift the tax burden by violating applicable tax regulations. This is commonly seen in tax evasion cases. For example, taxpayer not reporting all or part of their income in their tax return, charging expenses that should not be deducted from income to minimize tax liability, inflating expenses fictitiously. In other words, tax avoidance is a tax offense that involves using schemes to reduce tax liability by exploiting loopholes in the tax laws of a country. In principle, tax avoidance is legal because it doesn't violate any specific tax regulation. According to James Kessler, tax avoidance can be divided into two categories: permissible tax avoidance and impermissible tax avoidance. Permissible tax avoidance has a legitimate purpose, such as minimizing tax liability without resorting to artificial or fictitious transactions. On the other hand, impermissible tax avoidance has an illegitimate purpose, such as evading taxes through artificial or fictitious transactions. The main difference between tax avoidance and tax evasion lies in their legality. Tax avoidance is legal, while tax evasion is illegal. The meaning of legal and illegal here refers to the applicable law. A legal form of tax avoidance means that it doesn't violate the regulation in force in that country. In other words, it's still within the scope of legal protection. In contrast, illegal tax avoidance means that the avoidance is already categorized as an unlawful act or violates the applicable regulations. Therefore, the perpetrators can be subject to legal sanctions or imprisonment. In practice, taxpayers will establish shell companies in countries with low or no tax obligations, with the aim of diverting income and potentially obtaining tax reductions of up to 0%. Here are some ways wealthy individuals avoid paying taxes. Number one, corporate structure. For example, like Apple company, which used this scheme by establishing three cell companies in Ireland, a country known as a tax haven, under the ITAX tax scheme. Number two, investing overseas. Investing overseas can provide opportunities to reduce tax liabilities. Some countries offer tax incentive, asset protections, or jurisdictions with lower tax rates. However, it's important to ensure that such investments comply with applicable laws and regulations. Typically, overseas investments are also driven by the opportunities offered by the host country. This means that the destination country provides opportunities for foreign investors to facilitate the country's business processes, thereby increasing its business index. Number three, smart asset management. Managing assets intelligently, including investing in tax-advantaged financial instruments, can help optimize one's tax situations. This includes diversifying the portfolio, taking advantage of tax breaks available for certain types of assets, or maximizing the use of capital losses to offset capital gains. One example of this is Warren Buffett, one of the richest people in the world, who holds a large portion of his wealth in stocks. As a result, the percentage of tax paid by Warren Buffett on stock sale is not as high as the percentage of tax paid on income. And number four, meticulous tax planning. Utilizing clever and meticulous tax planning by taking advantage of applicable tax laws can legally help reduce one tax liability. This involves assessing and implementing strategies tailored to the individual's financial and legal situations. Understanding the applicable tax regulation can also help us avoid overpaying taxes, which can also be detrimental to ourselves. In conclusion, we can avoid taxes, but with the understanding that the form of avoidance must still comply with the applicable regulations. Tax avoidance can be done so that we do not end up paying more taxes than we are legally obligated to pay. On the other hand, the government itself has implemented several policies in the form of tax incentives to adjust to economic conditions and global situation. For example, in 2022, the Indonesian government provided tax incentive for MSMEs in the form of an exemption from final income tax for MSMEs with a gross turnover or business turnover of up to 500 million per year. In 2023, there were also many tax write-offs for vehicle tax applied by several regions in Indonesia. At the end, significant tax avoidance will harm to the country. The decrease in revenue will hinder the development process. That's all for our discussions today. Hopefully by watching this video, we now understand how wealthy people avoid taxes. In the future, we can be more knowledgeable and wise in fulfilling our tax obligations. And there is quotes that remember, money can buy happiness, but it can provide happiness. See you next time. Bye bye.